the reporting is bad, but I think the millions and millions of people who are catching on to the idea that government might be just a criminal syndicate that lives off of corruption and other people's money and counterfeiting at the printing press. I think that those ideas are starting to get out there and they're starting to sink in, largely because of alternative means such as your channel here, that it's getting out and it's sinking in. And, the great thing is that people are really, they're turning off cable and the mainstream media.
Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Dr. Mark Thornton. He's a senior fellow at the Mises Institute in Auburn, Alabama. The Mises Institute is a proponent of the Austrian School of Economics. And I have to say, the Austrian School of Economics changed the way I think. And I've been following it probably since late 1999, early 2000. So welcome to the show, Dr. Thornton.
Mario, it's a pleasure to be with you here today in person. I wake up around 4 o'clock in the morning, and when I don't have too much to do, I love to tune into your show.
Oh, that's great. A lot of people say that, and I'm flattered. Thank you very much. I started this channel 10 years ago, and I'm the home of alternative economics and contrarian views. And unfortunately, the Austrian School of Economics view is still alternative, but I think hopefully more and more people are waking up to it. So maybe you could tell us a little bit about what the Austrian School of Economics is all about before we go into what the monetary system is telling us.
Well, Ludwig von Mises brought the Austrian School of Economics to the United States during World War II. He was chased out of Europe by Hitler, and he learned from some of the great Austrian economists that began the school in Vienna more than a century ago, Karl Menger and Eugen von Bavarick. And it's a free market school of economics. It's a very traditional school that has its roots in classical economics, but made a lot of improvements in the classical school and really has brought the fundamentals of supply and demand and opportunity cost and price formation, all the fundamental analysis of markets were created by the Austrian school. And you'll see their influence maybe in the first few chapters of an economics textbook. Of course, most modern textbooks go off at that point into Keynesian economics and monetarism and a lot of other misleading schools of economic thought. But the Austrian school is grounded in property rights, voluntary exchange, and it's just built up a whole system of economics, including macroeconomics and the business cycle theory, which really helps explain the modern world as well as the basic free market economy that would exist in the absence of government intervention. And then the Austrians then explain the impact that government intervention will have in our daily lives.
Yeah, the other thing that the Austrian school, I guess, proposes is sound money. And I think that's a really important part of it as well, because...
Oh, yes, absolutely. Sound money, gold and silver, it means that whoever holds the money holds property, it holds a commodity, holds something of tangible value that then they use to exchange for goods and services, labor, and so forth. And so, it's quite natural that if you're grounded in property rights, that you would have to be grounded in sound money rather than just pieces of paper that can be printed up at will by the government and don't represent anything of tangible value, don't represent anything in terms of real property. And so it's a fundamental distinction because almost all schools of economics, other than the Austrian school, don't really see it that way. They see it paper money as a way for the government to save resources and for the economy to save resources. Then that goes all the way back to Milton Friedman's famous article, I think in 1960, where he chided the idea of a gold standard as a waste of resources in the economy.
Yeah, it's interesting because Milton Friedman is seen as a free market economist, like a hero. But I also heard that when Nixon closed the gold window in 1971, he supposedly said that gold would go to zero almost because nobody would want it. And here we are, over 50 years later, and we're at $4,000. But one of the books that I really like from the Austrian School is What Government Has Done to Our Money by Murray Rothbard. And I've recommended it many times for the viewers because it's not a big book and you don't have to be an economist to read it. So I just wanted to put that out there before we proceed. And Dr. Thornton, I mean, looking at the world right now and where the US is, and I cover the US a lot, of course, because it affects the whole world, and 45% of my viewers are in the US. I don't think we could be further away, unfortunately, from the tenets of the Austrian school. What do you think it will take for people to wake up to see that? I think the US is going the wrong way. We just saw this big, beautiful bill this year, and deficit spending has continued to grow. Today, as we speak, it's October 31st, and I heard that the US wants to bomb military facilities in Venezuela, which is all part of this fiat system that allows yeah, it makes it really easy for countries to wage war. What do you think it will take?
Well, Mario, I agree that the U.S. is moving in the wrong direction on many, many fronts in terms of money and the Federal Reserve and the macroeconomy, the trade war, the government budget, the big beautiful bill. I mean, these are all moves in the wrong direction, and that's what really worries me, along with the stock market and all the male investments that have taken place over the last 15, 20 years. It makes me worried about the fragility of the American economy, and especially the working class who are experiencing lower real wage rates in the United States. But on that bigger front, with Venezuela and the Middle East and Russia and China, the amount of conflict that's going on right now, and of course the trade war by President Trump is creating tensions between the United States people and countries around the world. And so the direction certainly isn't good. But on an optimistic note, I would think from my perspective, which is admittedly here at the Mises Institute, may be very biased, but I see many, many more people realizing the error of our ways here in the United States and maybe in other countries around the world. And those numbers are very large, so I think, and the young people that I see that are so eager to learn about Austrian economics, they've maybe experienced economics classes and they realize there's something wrong. And so more and more people, for a variety of reasons, from COVID and the lockdowns, especially the vaccination mandates, the fact that we shut down the economies and forced vaccinations and, printed up trillions of dollars to finance that whole crazy, zany period. And then, of course, the inflation that people have experienced and the rising price of gold. I mean, the media does not report on that. They only report on the gold price when it goes down a lot. So just recently, we've had lots of mainstream people reporting on that sharp sell-off in gold and silver. But other than that, they completely ignore it, and it's beyond belief. I remember back in the 1980s, the business news would regularly report on things like gold. So the reporting is bad, but I think the millions and millions of people who are catching on to the idea that government might be just a criminal syndicate that lives off of corruption and other people's money and counterfeiting at the printing press. I think that those ideas are starting to get out there and they're starting to sink in, largely because of alternative means such as your channel here, that it's getting out and it's sinking in. And, the great thing is that people are really, they're turning off cable and the mainstream media and they're going to alternative sources and they're getting a whole new set of information and a whole new set of data. And this is occurring daily in terms of millions and millions of people. So I'm actually much more optimistic. At our recent supporter summit conference in Florida, I gave a talk that where I tried to show that everything good in society comes from the bottom up. Our services, our goods, our new inventions, our new companies, everything, including the tax base, starts from the bottom up. And everything that comes from the top down, from presidents and the Congress and the Fed and things like that, all of that stuff is bad. And, I thought it was a pretty simple idea that was really just common sense, but it even struck home with my audience at the supporter summit, which are hardcore Austrian Misesian followers and believers. And these are people who study these ideas. But when I put it in those simplistic terms, people really realized that everything good in society has to bubble up from the ground up rather than from the top down. And I think it's happening on a massive scale.
I agree, and here in the UK as well, we're seeing a lot of people waking up. We have a new political party called Reform that is really, yeah, ruffling feathers. So it's encouraging. It's not all bad, and I think a lot of people, like you said, the alternative media, YouTube, people are getting a lot more information. Uh, I wanted to ask you because one of my favorite topics, not that I wanted, but because I remember well, reading and listening to Ben Bernanke's helicopter speech back in November 2002, and by then I just started buying gold. When I listened to that speech and read about it, I was very convinced that I needed to hold on to gold and keep buying gold because he basically said that the United States has a technology that is very doesn't cost anything, and they can just fight deflation, just print money and keep price levels high, which doesn't make sense, of course. But central bankers in the fiat currency world, they want the inflation. But yeah, this part here and I'll show the viewers the book.
His treatise.
Treatise, sorry. Yeah, treatise. Uh, or yeah, on page 428, he talks about the crack of boom, and I've put that there. Are we there yet? And I've been covering this for a few years, and I think we're closer and closer. And he talks about here how the crack of boom is when people finally wake up to the fact that inflation is a government policy. It's not because prices go up, which is another thing that they fool us with. saying that inflation is rising prices, which is not, of course. It's the consequence. So I wonder if we could start here, and you could give us your view of where we are and whether you think we have a danger of a crack up boom where we see the current currency, the fiat dollar, actually crash and become like the continental dollar back in 1781.
Yes, as a matter of fact, I've spoken about this recently on the prospects for a hyperinflation in this current world on a recent episode of my Minor Issues podcast. And, I think it is relatively close. These things, like the business cycle and hyperinflation, they take a lot longer than anybody could imagine, in the lead up to these things. And then they happen quicker than anybody would ever believe them happening. So it's almost impossible to really date these things. But I would say that all of the preconditions are currently in existence for continued inflation of prices, continued inflation of the money supply, and certainly the potential for hyperinflation. There's a lot of countries that have experienced hyperinflations since the ones that Mises wrote about in Human Action. So these things are periodic, but if you're talking about the US dollar, you're talking about the top dog in the world fiat money food chain, basically the most in-demand currency in the world. And so it hasn't experienced a hyperinflation. The United States has not really experienced a hyperinflation for quite some time. But the prospects are there in terms of the preconditions, which is runaway government spending, which we certainly have, a runaway budget deficit, which we certainly have in the United States and elsewhere. And then you have a runaway national debt by the government, which we certainly have, and interest payments on that national debt growing in a kind of exponential fashion. And so if those interest payments continue to grow along those lines, specifically larger deficits, larger debt, and increasing interest payments where citizens don't get any services, they only get higher prices. If interest rates are going to rise and the inflation factor in interest rates is expected to rise, especially with President Trump's appointments, his attacks on Jerome Powell, his attacks on the Federal Reserve, inducing a easy money policy or a more inflationary money policy, then yes, I mean, all of those preconditions are currently in existence. And, what we have right now is that even other central banks around the world do not trust the U.S. dollar. And so the U.S. dollar has fallen a great deal so far this year. And that's just relative to other paper currencies. So, that's a very negative sign. That's a black mark on this situation. And so we can see that the preconditions are set for this problem, which will or could ultimately end in hyperinflation, which, some people call it 50% increases in prices per month. That's the way statisticians look at hyperinflations. But of course, the inflation rates in, the German hyperinflation, the French hyperinflation, those increases in prices of goods and services were really astronomical, especially if you calculate them on an annual basis. The rates are so high that it very quickly becomes almost useless to even use currency, just because the currency is just so dramatically losing value. And at that point, of course, I expect people to start using silver in certain day-to-day exchanges. So people will start migrating over to using silver and barter and that kind of thing. We're still a ways away from that, but like I said in the beginning, once these things start to happen, the government loses complete control of the situation. And what we see right now in the United States is a government that's out of control with its spending. It can't even manage to do legislation on a regular basis. The U.S. government is currently shut down, and both political parties have found that it reflects positively on them. Now imagine this. It reflects relatively positively on both political parties that they've essentially shut the government down out of business. So, that's how bad things are currently. And that's why we have all-time record high prices in gold and silver around the world, is that, citizens, not just in the U.S., but around the world, do not believe in their fiat currencies. Central banks don't trust other central banks. The South Korean central bank, for example, which is a loyal ally where the U.S. has, a lot of military presence right in South Korea, and they're even buying more gold right now. So I think we are in a situation of deep uncertainty. People have to protect themselves, but even central banks don't trust other central banks. They don't trust other nations. And so the preconditions are ripe for a hyperinflation, or at least more inflation to come.
Yeah, because back in 1923, during the German hyperinflation, the Reichsmark was not the major reserve currency. I don't think we've ever seen a major reserve currency hyperinflate. And usually, let's say I grew up in Brazil, and we use dollars if their local currency hyperinflated. We didn't use gold, but I think the central banks around the world, aside from trying to let's say, diversify from the dollar as a political, because the U.S. has used the dollar as a political weapon. I think they can see the writing on the wall of the runaway deficits and spending, so they're loading up on gold. And I guess even though I'm not really a fan of central banks, I think in this instance they're right. And you mentioned that hyperinflation starts, I mean, it brews, it takes a long time to brew, but when it starts, it's like, it's almost like it's so quick that you can't even react to it if you haven't exchanged your fiat currency for anything that has value. Doesn't necessarily have to be gold and silver, but anything tangible and that allows you to survive. I think you're 1 day late. I've been looking at these two charts for a while now, and I call it disturbing resemblance. And this is the Reichsmark back after World War One, and that's the price of 1 gold mark. And you can see that the price was going quite gradually, and then all of a sudden here in the summer of 1922, it just took off, and then by I think the end of 1923, the Reichsmark collapsed, and they had to bring in a new currency. I think it was called the Rentenmark, and that was backed by gold. And even though this chart here on the right is a current day dollar price of gold, it's over a longer period, but it looks very similar. And I think it's really concerning. And I think we could be around here What's your take on this?
Well, that's exactly the type of thing that I'm concerned about. And I've been a coin collector and silver stacker my entire life since I was about 9 years old. And I encourage, if you're on a fiat monetary system, I just think I'm not a financial advisor, but I just think it makes sense that you would save your money, or at least a part of your money, in precious metals, securely someplace, because of the potential for this kind of thing. So you don't have to worry about that, because psychologically it's very, very difficult when people start seeing the family budget disintegrate before their very eyes. And so you need to be prepared in advance. The time to buy a fire extinguisher is not when the fire breaks out, but when you buy the house, or when you move into the house is the time to buy your fire extinguisher. And so that's always been my approach. And that's what I've always recommended to people, because of the situation and because of the psychological damaging effects, that impact people. And in terms of the dollar, and you mentioned that people in Brazil use dollars. Well, people around the world hold part of their savings in terms of dollars because they've experienced lots of inflation. Now, let's imagine a world where instead of just 1 year, we see a 10% fall in the value of the dollar versus the dollar index of other fiat currencies. But what happens if these other fiat currencies experiencing a loss of purchasing power, which is certainly possible with the British pound and the Japanese yen and the euro? And what if the dollar outpaces all of that, and people around the world want to repatriate their dollars back to the U.S. and pick up maybe silver or gold instead? And what happens, if people want to take their investments out of the U.S. dollars in U.S. stocks and repatriate them back into their local economies? And what happens if drug dealers who hold vast hordes of U.S. currency, if they want to get rid of all of that U.S. currency and get into gold, silver, Bitcoin, or whatever? And what if that all happens in a short period of time because of what goes on in Washington, D.C., or what goes on at the Fed? What happens if the Fed goes back to a zero interest rate policy? What happens if the Fed decides that it needs to expand its balance sheet? They just said yesterday that they're going to stop the quantitative tightening, which of course we've all been expecting, and I've been expecting that they're going to go back into quantitative easing. They're going to try to squash down those long-term interest rates by the Fed buying long-term U.S. bonds and mortgage-backed securities and things of that nature, as well as just treasury bills. What if all that happens? Well, the value of the dollar is just going to start a cascade downwards. And so we don't know when that's going to happen. We don't know even if that's going to happen. But, in terms of my savings and other people's savings, I would rather want to be pre-prepared, with my fire extinguisher against government inflation, basically. I would not want to wait around and hope that the coin shop is opened, or that online dealers happen to have supplies on hand, because what we've seen, during the recent growing pains in the market for precious metals for retail buyers, is that they've experienced just the growing pains recently of the new high prices, that all of a sudden they may be just totally out of stock, or they may be charging. Like the last time I checked, an online dealer, they wanted it was like a 20% premium for the U.S. Silver Eagle. So, you want to take advantage of situations as they occur over time and be prepared for something. You don't want to try to react like some sort of machine trading robot on Wall Street, because you don't have that. You're not prepared to do that. So I would get pre-prepared for those contingencies.
Yeah, you said earlier in the interview that the mainstream press they talk about gold only when it goes down, and the other thing that happens is that people that never cover gold, they come out of the woodwork to call it top, and they don't seem to understand how important gold and silver are in terms of a currency insurance, or like a fire extinguisher, as you said, and that is really well, it's worrying for that. It's worrying because I think they're going to be blindsided by what's coming. And I was going to ask you what you think could be the trigger, but of course it's difficult to say. But the other thing, Mark, that I've been covering, and you might have seen some of my videos about this, is that hyperinflation is not just like the currency losing value because the central bank and the government print and borrow too much, but it's also to do with the political climate in the country. And you were saying that you were at a conference recently, and you said that everything that's good comes from below, and right now everything that's bad comes with COVID and all the other crises is coming from above, and I think that's important because when people lose faith and confidence in their leaders, they'll lose faith and confidence in the currency that they issued. So, do you see that also as something that will weigh on the dollar?
Oh, absolutely. And I think, the general trigger that I think is worth considering, but there are many, and there are triggers for this as well, is a collapse in the U.S. stock market. It's the one bright, shining star in the world economy, the Magnificent Seven and the AI revolution and all of that seems to be holding up the U.S. stock market and buoys markets around the world. And of course, it's created a lot of investment intensity in certain areas of the U.S. economy. So, people think, well, if that is doing so well, then things are probably okay. If we start, or when we start to see a breakdown in the U.S. stock market, and of course we know that Europeans have been investing heavily in the U.S. market in recent years, and they hold, a vast amount of investments in the U.S. economy. So I think if the U.S. stock market starts to sink and people start diversifying away from that, I think that's really the trigger. And I think you're right. I mean, people start to lose confidence, and the Fed is, of course, always playing a confidence game. They're always telling us things are great, things are good. They're looking out for our safety. They will come to the rescue. And so the people are being fed all of this confidence, to believe in the system, even though the system is clearly ripping off most people. Basically, I mean, the people are not benefiting from this from the system, and it's really just a matter of enough people waking up to the fact that they're getting ripped off by the system, and then being able to identify who's doing the ripoff, because this is kind of like a shell game that the Fed plays with the spending and the deficits and the debt and the inflation and the Fed buying, government bonds and, bailing out people. It's all kind of a shell game, so it's hard to catch on. And that's where I think I'm optimistic, because I see so many people in my daily life who just disregarded everything I said when I was younger, that they just didn't believe, that Thornton's a crackpot, Thornton's an academic, Thornton is a, wide-eyed optimist or pessimist, both of those two things. And now they realize that, well, maybe I was right about a few things. And so people are catching on, and I think that's the optimistic message. But once a significant number of more people catch on to this game that is being played to their own detriment, and that's when I see the system hopefully reforming itself in the right direction. But even if it doesn't, even if we head down this road to hyperinflation, which I really hope we don't, because there's a lot of bad things that can happen under those circumstances, it's still going to mean that people are going to have to rebuild their economy, their local economy, from the ground up. And they're going to have to resort in hyperinflation to going back to gold and silver, to barter, to local communities, local economies, and things of that nature. So they're going to realize that the top-down solutions were there to their detriment and to the enrichment of the political elites. And their salvation did not come from those political elites, but their salvation came from their local circumstances, their friends, their family, their business associates. That's where the real solutions are going to ultimately come from.
Interesting. You talked about the Fed, and I listened to Jay Powell the other day, his press conference after the FOMC meeting. Not that I like listening to it, but I needed to see what he was saying. And he actually admitted that there's like two economies. There's the Wall Street and the EAI sector who are doing great. And he even said the bottom 50 is not doing well. So too bad none of the reporters asked him a question. Don't you think that's because of you, right? Because of the Fed, you help out Wall Street and the corporations, and the people get left with with the currency that becomes worth less and less, which is what's the effect? I forgot the name now. He was a Irish French economist back during
Cantillon.
Cantillon effect. The Cantillon effect, yeah. So, that the money, the people closest to the money spigot, they do really well, and by the time it gets to the bottom 50%, it's become worth less and less. One thing, though, I wanted you to explain, Mark, is because in that little piece of the human action that I brought up, von Mises, or in human action, he talks about the mathematical economists, or if you want to call it the PhD economists nowadays, who don't really consider human action. And I think that's one of the great things about the Austrian school. They look at how humans react. They don't just look at equations and numbers. And one of the books that really helped me was Fiat Money, Inflation in France by Andrew Dixon White. And I know he wasn't an Austrian, but what I learned from that book is once you start down the road of printing money, it's really hard to stop. So do you think this is where we are? Like when there is a crisis, and I think we could be near a crisis, I don't know what could trigger it. We could see the Fed print even more trillions on its balance sheet. So maybe you could explain to us the difference between the way Austrians think and Keynesians think.
Well, of course, the mathematical and Keynesian economists are thinking in macroeconomic terms rather than in microeconomic terms. From Cantillon's day, and I do a lot of my research on Richard Cantillon, and he was really the first theoretical economist and an Austrian in a sense. But this is, yeah, this is part of the whole cover up thing where, the Fed will say, well, we cut interest rates. That's going to help the little guy be able to buy a car or buy a house or reduce the credit card interest rate. But of course, that's not going to really help the little guy. You're just digging the little guy into more and more debt. What that really ends up helping is the banks, corporate America, the big guys, the political elites are the ones that benefit from those lower interest rates, even if they're on a temporary basis. So it doesn't help the little guy. It's what's led to the fact that the little guy has lots of debt, is burdened with excessive amounts of borrowing and credit card debt and so on. And this is that whole process has enriched, as Cantillon shows, it enriches the people who first get the money. And that's Washington, D.C., and it's the big banks. Those are the people who get the money. Those are the people who see their asset prices go up without the price of goods and services going up. By the time the little guy gets the money, everything's already been marked up. And so the idea that it helps the little guy in any way is just completely backwards. It just digs the holes for the little people, the consumers, the workers, that much deeper. Stopping the printing press is politically harmful. Mises says that's the only way to deal with the situation. And of course, politicians, they don't want that because the government is the biggest debtor of all. And of course, the political elites and the banks are the ones that are holding a great deal of that debt and are leveraging up their own investments based on that debt. And so when you break it down and you look at who's got the money, who gets the money, when do they get the money, you find that the process enriches the political elites and hurts the working class people out there in the economy. Now, if we stop the printing press, what that's going to cause is asset price deflation. If there's no more fuel going into those credit pipelines, then asset price deflation is going to take place. And that means stock prices, real estate prices, those are the things that are going to fall. It's going to put the government, like the U.S. government and other governments, it's going to put them in a position of defaulting or into hyperinflation. So that the pain is going to be at least started there at the government level, at the high level of the stock market and the high level of the real estate market. It's not going to really cause an end to toothpaste production, for example. It's not going to, end the production of Coca-Cola. Things of that nature. That's all going to go on. Electricity is still going to flow. The pain is going to be felt throughout the entire system, but the most concentrated pain is going to occur right where we want it to, which is in government itself and the political elites that control Wall Street, that control the government, that control the vast swaths of the most expensive real estate in the economy, the skyscrapers and Wall Street and all the rest. So that's exactly the way I would prefer to deal out the pain, is to put it most heavily on those people who are responsible for creating this massive situation in the first place.
Yeah, Ron Paul, I met him back in 2002. My wife and I went to the 20th anniversary of the Mises Institute, and he was talking about how he got Alan Greenspan to autograph the article he wrote in the 60s called Golden Economic Freedom. And he asked Greenspan, "Do you still believe in that?" And he said, "Yes, 100%. And he said, unfortunately, the vast majority of people, they like the inflation, they like the government subsidies. So I guess if we did stop the printing press, it would hurt like the elites, but it would also hurt a lot of people that are dependent on government. What would be the way to like cushion that? I think Ron Paul, he spoke about doing it gradually, for example, so that the people, let's say seniors and people who still depend on the system get some help.
Yeah, I mean, I'm not an expert in that area, and I fully agree with the idea that, we should have some buffers, multiple layers of buffers to support the people who were not part of the problem in the first place, were not responsible for creating this system in the first place, and that all of the pain should be dealt out to the people who benefited from the system and created the system and, have become massively wealthy as a result. So, and I don't think that the normal channels of the economy are going to completely dry up. So I don't think electricity is going to stop. I don't think food is going to stop. I don't think toothpaste is going to stop. And but Ron Paul is right that we have to be ready and able to support those that are otherwise completely dependent upon the government. And of course, we should be working for restoring people's independence right along. Everything we do, everything the government should be doing, should be working in the direction of restoring people's independence, like encouraging them to have gold and silver, like encouraging them to have safety, savings, especially of some sort, to have a job, to develop skills, to develop multiple skills in the workplace so that you're capable of absorbing the tremendous changes that are going to be taking place, depending upon, of course, the types of reforms that we get and when we get them. But again, stopping the printing press is going to dole out the pain most heavily and most directly on the people who are responsible and who are best able to absorb those pains, the millionaires, the billionaires. And, we're fast approaching an era where we're going to have our first trillionaires. And these are people who are not only benefiting from the Fed, but are also benefiting from government contracts, whether that's Amazon or Google or Larry Ellison or Planeteer. All of those government contracts have to go away, and the government has to basically completely stop doing most of what it's doing, including, Social Security has to morph into a welfare program that helps out people who otherwise have no means of support, basically, in a national government bankruptcy situation. That's the general direction that things would have to take place. So just imagine the government going through a bankruptcy process and a prioritization of the remaining assets and income and expenditures. What has to go and what needs to stay is a matter of priorities, is a matter of legal obligations, basically. But it's going to be painful. But even if you continue to print up money to pay for all these things, that does not reduce the overall pain. It just increases it and spreads it out over a longer period of time. And unfortunately, if we don't do something soon, we're highly damaging the current and future generations of economies around the world. People wonder, well, why aren't people having children? Why is the working age population shrinking? Well, it's because This generation and previous generations have dumped an enormous amount of obligations onto the future. So if you're having children, you're birthing them into systems which place enormous burdens on them. And that's got to stop, or the entire race is at risk. You see the demographic problems that are emerging, causing strange political reactions in Europe and the UK and the United States, even in China, Japan. So these have wide-ranging effects. It's not just your personal pocketbook issues. What the Fed has been doing, what central banks have been doing, what the fiat monetary system and this runaway government debt has been doing is really undermining the very basis of human civilization.
Yeah, no, I agree. And like you said, stopping the printing press and bringing the system down is actually not as bad as people think, in my opinion, because there will still be factories out there, there will still be real estate, and there will still be people. All you need to do is reorganize the monetary system into a fair and sound money system, I think. And if we keep printing and delaying things, we're just kicking the can down the road. So I agree with you 100% there.
Yeah,
Any
all the physical capital is still going to be there. It's just a matter of who owns it moving forward. And we've seen with these hyperinflations that in the aftermath, people recover very quickly, especially if they're given a fundamentally sound monetary system and a free market economy. Just look at Germany and Japan after World War II. They had their capital all destroyed and their population wiped out, but they were given a free market economy, and they not only recovered, but they became two of the fastest growing economies in the world within the matter of just a decade or two. So recovery can be quick and swift and miraculous, really.
Yeah, it was the German economic miracle, Wirtschaftswunder. Dr. Thornton, it was great speaking with you. We should speak again. Let me know when if you have something you want to talk about. And I love the Mises Institute. And yeah, I'm ready to talk to you again and other people there.
I really enjoyed it, Mario, and we have a book offer right now where you can get Hayek's greatest hits. So if you put your "I want Hayek's greatest hits" or just Hayek in the comments of this show, I'll send you the link where you can get a free copy, or actually free copies
Yeah.
of this book. And Hayek was a great student of Ludwig von Mises. He won the Nobel Prize, and he was one of the main inflation fighters during the stagflation of the 1970s, and he was really the ideological backbone for Margaret Thatcher and for Ronald Reagan. And so I would encourage everybody to get a copy of this book.
Yeah, and I think the first 100,000 are free, aren't they? So I'm going to put a link in the description of this video.
Okay, great.
All
I
right.
look forward to speaking with you.
Me too. Thank you, and have a great day.